Well, for most of the day, the story was the European Central Bank's decision to cut interest rates and expand its economic stimulus program. Julia Chatterley has the details from Frankfurt, Germany.
Investors were hoping for a bazooka, and Mario Draghi, president of the European Central Bank, more than obliged. He announced a 25% increase in the monthly asset purchases. This in an effort to keep bond yields down, keep mortgage costs and consumer loan costs down. He also announced 4 big new lending facilities, 4-year money that can be borrowed at 0 rates. And get this, he said if the banks can get their net lending above a certain threshold, they'll be paid to do it. So all the focus really in this meeting about pushing cash out to the real economy and making sure the banks aren't being damaged too much by negative deposit rates. He did take those, though, further into negative territory, but at the same time you see this effort to offset some of the impact that's having on bank profitability. We saw bank stocks certainly rally in the European session today. What else he announced, though, and this is the big one, they are going to be buying corporate bonds in Europe as well. They won't buy bank bonds, but we're still seeing a huge increase in the available assets that they're now willing to buy. I have to say, he also mentioned the fact that rates in Europe will remain significantly low beyond the end of this program, which is March 2017. So while there was an effort to get cash out to the real economy, protect the profitability of banks, you have to feel sorry for savers, both in Germany and more broadly in the Eurozone. For Nightly Business Report, I'm Julia Chatterley in Frankfurt.